Virgin Galactic, suborbital space travel company. The stock has fallen hard from almost $60 of all-time high in the middle of June 2021 to $7 in July 2022, a drop over 70% in the year, a stock I used to own and later sold at close to all-time high. I want to talk about why I changed my view on this company, and now even if it's $7, I still don't think you should buy the stock if you're a long-term investor. Beginning operating in 2004, the space tourist company was able to beat the competitor Blue Origin and SpaceX to send its crew to space in July 2021. However, the symbolic victory won't help the company struggle with its operation. Virgin Galactic is a severe cash-burning business with no guaranteed target day of commercial flight. When we look at Virgin Galactic's trailing 12-month cash flow, it sits as negative $254 million, with $849 million coming from financial activity. The company has never had positive cash flow from operation since it's going public, due to its keep postponing its commercial operation. The company did have $3 million year over year in first quarter from its financial report, but the revenue was from providing engineer service and transporting research payload. Virgin Galactic is a classic other people money company and a pretty good story company in the potential $100 billion industry. However, what this bear market has told me is that it is especially crucial to invest in the company with a solid earning. So when the whole market drops, you're not losing more than index. Once the bear market passes, a company with solid earning will bounce back quick and leave you with massive return. A story company with no proven operation record may never bounce back to its glorious day. So far, Virgin Galactic is the latter. On top of being a cash-burning machine, Virgin Galactic posted its first commercial flight from late 2022 to the first quarter of 2023 because of the supply chain and labor constraints, a theme that are too familiar to all Virgin Galactic stockholders. At this point, I think I almost lost count how many times that Virgin Galactic announced some sort of delay. With worsening inflation and potential recession, how many people are still willing to pay $450,000 to fly with Virgin Galactic? Although some has argued that Virgin Galactic's technology can make the company its potential leader in a whole new different industry, a hypersonic point-to-point travel flight service. However, at this point, I highly questioning the company's ability to execute its plan and unwilling to put my money in the stock based on another promise. Another concern from me is from Virgin Galactic's competitors. Virgin Galactic simply has no moat compared to its competitor Blue Origin. Since Bezos' initial flight, Blue Origin has flown 4 additional human flights on the first step capsule, a cadence of about 1 flight every 2 months. Vehicle performance has largely been flawless, with none of the safety or material questions that have dogged VSS unit. The company hoped to reach a flight cadence of 1 human mission about every 2 weeks within the next year or two, a goal that does not seem out of reach. Blue Origin has some distinct advantage, principally financial. Bezos has poured $1 billion into the space company. This money has allowed Blue Origin to hire some of the industry's best engineers and make sure the program has adequate staffing. By contrast, Virgin Galactic does not have a deep pocket compared to Blue Origin. Its founder, Richard Branson, sold off much of his ownership of the company. Although the company do have $1.2 billion cash in its hand, is it enough to hold the company to scale up its operation? Virgin Galactic's expenses are $80 million per quarter. A $450,000 a seat need 30 full flight a quarter just to break even on its business. And adding fuel replacements cost $7.5 million per quarter for that 30 flight. Virgin Galactic must add another 3 flights on top of 30 flights per quarter. But the CFO Douglas explained in the company's conference call, Virgin Galactic believes that it will be able to fly its unit space plane once per month and its image space plane twice per month. That add up to 3 flights per month, or 9 flights per quarter, not 33, and no sooner than first quarter 2023, when Image is expecting to begin flying, even counting its Delta-class spaceplane to the fleet, adding additional flight capacity to once a week. company will not be able to break even till 2025 or 2026. And again, I highly question its projection, not only because Virgin Galactic so far has an abysmal track record, but also in any business, scale up is very hard to achieve. I simply don't want to bet both my money and time on Virgin Galactic when there's other good profitable company for me to invest in. This stock is no-go for me. This is just my opinion. I'm not some financial advice for anybody. It's important you do your own research and form your own conclusion.